doing?
Um,
Curtis, I thought you couldn't come, Curtis. I'm glad
No,
to see
I mean,
you.
yeah, I was just
Oh,
telling Jay that the Chief's father had passed, and so now I have to do all.
okay. Ray, how you doing, Ray?
Good. How are you doing?
Fine.
Hey, Ray.
So I need to call the meeting to order.
Yes, you do.
Okay. The Finance Committee meeting is now called to order. How you doing, Jackie? I didn't speak to you.
Hi there, Pat. Hanging in there at a rapid fire series of meetings this morning, so we're on a roll.
Okay.
Whew.
I know.
Well,
Okay.
I'm hoping that, well, you guys got the schedule. We're planning to have 4 of these meetings in the year, and I'm hoping that it could be more informal. You guys ask questions as we go along, hearing from you about more of what you want to know about, so that you can learn more about
Yes.
our finances here at the library.
I really do appreciate moving to the 4 meetings. I think that's good. So I won't have to worry you all the time about, well, I'm not going to say I still won't worry you, but
Yes, please do
it'll be
feel free.
less.
I do actually like for you to call me and for us to talk about what's coming up. So that is
Okay.
fine still. But
Okay.
I was hoping to kind of condense the meetings, make them more substantive so that
Okay.
hopefully we can get more out of them. So our first item, which we went over at the board meeting, so I'm not going to spend a lot of time, but I did want to briefly touch on our 2020 financial and see if you guys had any questions on that. Since we don't really go over it in detail at the board meeting, I wanted to see if you guys had any questions. So let me quickly share my screen here and see if I can do this. Can you guys see my screen now?
I can see it.
Yeah.
Nice if it were bigger. Yep.
Right, yeah, small, yeah.
Yeah, I don't know. Yeah, let me try to. Something weird has happened with my
EJ, there's a little zoom toggle on the bottom right, I think, of the below the slide.
There's a zoom toggle on the right.
The bottom right of the window.
Yeah.
Can you see it bigger now? I try to start the presentation. No, you can't. Okay.
It's a little bigger, but when you get to those tiny numbers.
Let me do something else.
This is the stuff you sent us, but.
Yeah, I've got copies. I got a copy of it.
It's kind of frustrating though. Let me just make it bigger. All right, well, I'll just share. I was trying to do the slideshow thing, but I'll just share it in the state that it is. Is it better now?
Go ahead to the next slide and we'll see.
Oh, it's not bigger?
It is. All right, now. Okay. Yeah.
All right, well, here, this is basically showing the 2 prior years, 2018, 2019. Then we're showing 2020 actual numbers, and then we're showing 2020 budget. Now, I go over this at the board meeting, but I wanted to kind of show you guys what our trend has been and then where we landed for 2020. So as you can see on the revenue side of things, we've been doing pretty good on the property taxes, increasing steadily. And then for 2020, as compared to our budget, we got 912,000 more than our levy, because what we budget is the maximum of our levy. We anticipate we'll get everything we budgeted. I mean, everything we levied. So that was a nice surprise. And it's something that has been happening. They've caught up a lot on delinquent taxes. So I don't know how long this will happen in future years. So we've talked about whether we should budget for being above and beyond our property tax revenues in the future. But that's risky. So for now, we'll just keep budgeting our maximum levy. And you guys understand what that is, right? If you don't, that's
Don't assume that I understand anything about finance. But when I look at 2020
Mhm.
and then what we budgeted for 2020, then that variance is the 912,000
$912,000 for property
between
taxes.
what we budgeted and what the actual was. Okay.
Yes, and we're always conservative on what we budget for revenues. So we don't budget as much as we truly expect we will get
Okay.
in all these other categories. Yes, go ahead, Jackie.
I wanted to ask EJ, sometimes if you get too much property taxes in excess of your levy, they could ask you to set it aside and not spend it, right?
Correct.
There's a word
Yes.
for that. I'm trying to remember.
Excess levy.
Excess levy. And this
Excess
amount
levy.
is not so much that it triggers that, is it?
No, this amount does not trigger it. I don't believe it does. I think it's if you get above 2%.
Okay.
Excess levy.
Mhm.
What's the difference between like the circuit breakers and the levy? Is that one and the same, or is that?
No, it's not the same. So the circuit breaker is basically an addition of all the, okay, so the circuit breaker is, let's see how I can start the explanation, is where you have, for each property taxpayer, they can't pay more than 1% of the value of their home.
Okay.
So when you add up, so when we set our tax rate, we set it based, we come up with a levy, right? This is how much property taxes we're gonna, we need. And then, or we're allowed to have.
Allowed.
Allowed to have. And then we take that number divided by the assessed value, and we come up with a rate. And that rate is applied to each person's home value. But if it exceeds that 1% of the value of their home, then the difference is called the circuit breaker.
Okay.
So that difference is what we will never collect. So if we say this is how much we're allowed to have, there is a portion that we never collect of what we're allowed to have.
Okay.
That's the circuit breaker loss.
Okay. Thank you.
And that's a really good question, because actually it applies to the reason why we never get an excess levy is because of the circuit breaker loss, we never actually are going to even reach 100% of our allowable levy.
Okay.
And so I shouldn't say never. Chances are we won't.
EJ, how much did we lose to circuit breaker, do you think, this year? It was a lot.
So, yes, we did. Actually, I could tell you what that amount is. Just a second. We lost. I have it right here on actually I have it on the slide here. Hold on.
And this is now in law, so this is not going away. This is going to happen every year.
Yeah, so this year we lost 7.8 million. And as compared to last year,
7.8 million.
yeah,
Yep.
7.8 million to circuit breaker.
Money that we would have been allowed to raise by the maximum levy calculation from the state, but we can't raise because of the circuit breaker legislation from the state.
Wow.
And it's too bad, because if we had that, life would be so different.
If we had that, we would be able to collect 43, or we would have been able to collect 43.5 million in 2020. And of course, that would make our lives so much better, both
Yeah.
collected. So that factors in, and I'll show you that in a minute as well. So then you see here all of our kind of facility dependent revenues. So our facility rentals, our in-branch revenues, which are like our printing, our faxing, copier fees. Those are obviously down as a result of our branches being closed for a big part of the year. And then for fines, you all know why we stopped charging fines during the pandemic, and now we've permanently eliminated fines. So going forward, we won't have that anymore as well. So you see there's a variance there as well. We budgeted we would get 650,000 in fines. We only got 198,000
Okay.
fines and fees.
I think you've answered this at board meeting, but as a result now of not having fines anymore, we can expect how much in fine? I mean, how much in revenue would that? Ooh, did you hear me use the word revenue? I'm so proud.
I know,
of
I love it.
How much in revenue will that? We won't get that anymore.
We won't get. So yes, that is a good question. We received 477,000 in 2019.
Okay.
Fine revenue. So in this number you're seeing here, that includes fines and fees.
Fines and fees.
Yeah,
okay.
So lost book fees and damaged book fees are.
Okay.
And so we will still collect that.
Yeah.
The lost book fees and the damaged book fees. But we will lose about 470,000. Now, I will say this, we said this also in when we were talking about the fine elimination, but fine revenue has been going down consistently. So even though we had 470,000 in 2019, we probably wouldn't have had that in 2020, because with the ebooks circulation going up, we don't have fines on ebooks because they automatically return. So yeah. Well, any other questions on the revenues?
One thing, I guess one other thing, I know we're looking at 2020. Are you still projecting in 2021 this year for the impact from 2020? And what does that look like, I guess? Or
okay, yeah.
I guess I might be jumping somewhere. I apologize.
No, you are jumping a bit, but that is fine. I want this to be when you think of the question, let's answer it. For 2021, we did budget our revenues with I think anticipating that we would be closed maybe 2 months out of the year. So all of our in-branch revenues were reduced a bit. We also made an assumption that we wouldn't collect 100% of our property taxes, which I think we will revise that because of the way we ended 2020. We didn't have any problems with collection. I don't anticipate we'll have any problems with collection in 2021.
Okay.
Yes, go ahead, Jackie.
EJ, the other big difference I assume for 21 is that we don't anticipate another $1 million insurance reimbursement.
Correct. So
that was a real surprise.
Okay.
So we get a reimbursed, so we're self-funded, but we also have reinsurance, which can be confusing. But we insure ourselves for any claims over 100,000. So sometimes we get reimbursement if we have some claims that were over 100,000. in total. And then in aggregate, we have an aggregate insurance, a reinsurance amount. If we get anything above an aggregate amount, we get reimbursed. So because of those reinsurance amounts, we got back $1 million for our health insurance. So that's something that we can't rely on, and it boosted our numbers for 2020. But going back to our 2021 projections, the pandemic is really not going to affect 2021 because there's a two-year lag in our property tax assessments, as well as a 2-year lag in our income tax distribution. So we'll see the impact for the 2020 pandemic in 2022. So that's the first year when we'll actually see the true impact. If we're hoping that impact is not as bad as originally anticipated because of the unemployment checks, the stimulus checks. They did kind of help on the income because the unemployment checks are taxable. The stimulus ones are not taxable. All right, so on the expenditure side, 2020 was not a typical year. We spent way less than we would have spent had it not been for the pandemic. So we didn't have subs. We had vacancies that we held open. So as you can see here on our salaries and our benefits, I mean, those combined are 3.2 million in savings. And then part of that also is insurance, savings and insurance, because we budget, we put in our budget before we actually get what our premiums are going to be for the year. So we budgeted a little higher. And so we had some savings there as well. But as you can see, supplies, we didn't have as many supplies. Utilities were down because we didn't have buildings open and we weren't using as many, as much utilities. And then let's see what's another high. Repairs and maintenance were down. And then our security was lower than anticipated because we were going to we budgeted the use of security off-duty police officers at both Warren and Pike. And we didn't end up having to do that because school was not in session.
Yeah.
So
EJ, where does the cleaning, when we have to go in and do the cleaning, where does that come under?
yeah, so that falls under other services and charges. Now,
Okay.
the thing to keep in mind here is that we did get $172,000 in reimbursement from the city for those COVID-related cleaning expenses.
Okay.
So it didn't really show up in our budget because we were we accounted for that in a different fund. So we moved those expenses to a different fund, the net zero fund. And then the other thing to think about here is that some of these expenses were actually ordered but not paid for in 2020. For instance, our collection materials, we did spend all of our 2020 budget, but we didn't pay for them by the end of 2020. So the $525,000 that shows here, we will actually spend that or have spent that in January. And then, as you guys know, we transferred $1 million to the rainy day fund.
And EJ, that was something we didn't originally plan on doing, but it is something we have the ability to do if we end up with some savings. So rather than just have it fall to fund balance and spend it next year, we really can do something in a better long-term strategy by putting it in that rainy day fund, and it kind of gets it out of the routine of spending and makes you save it for something special.
Yeah, I was going to ask about that because it looks like we've got essentially like a $9.2 million swing, right? Because we underspent by 7.3 and collected 1.8 more. Is there an idea to put more in the rainy day fund, or do we probably need it for 21?
Well, yeah, because currently that's a very good question. And I kind of wish we did put a little bit more. We were being conservative
Mhm.
at the time, but, and we still can. The only thing is that we do have restrictions on our rainy day fund. Here at the library, the board chose to have restrictions on the rainy day fund. So it can only be used for capital expenditures.
Gotcha.
And so we do have a long-term plan, and I'll show you that shortly here. We have a long-term plan where we look at the past 5 years, we look at the current budget year, and then we look at the next 5 years. And so this cash balance does help us meet any projected deficits we have in the next couple years.
Yeah.
As we try to plan for what to do about additional revenues.
We have a lot of bonding capacity when it comes to capital expenditures. So we want to save that money for other.
Exactly.
Okay.
You hit the nail on the head. So we don't want to put too much aside because that is where we have the most flexibility. We have bonding capacity. All right, so here's that same picture in graph form. So you see what our revenues have done in 18, 19, and 20, and then compare that to what we budgeted for 20. Salaries and benefits, steady increase, and then compared to what we budgeted for 20. Now keep in mind, again, the vacancies, the fact that we didn't use subs, but we also budgeted for Westbury for a full year. We didn't have Westbury for a full year. So that's that picture. And then the rest of it is self-explanatory. I don't have to go through each one. And then I just wanted to also show you a picture of our expenditures. Where are our biggest expenditures? You can see here, salaries and benefits, and that's what takes the bulk of our operating.
Yeah.
So, and in a way, you know, we don't have a lot of room for all these other discretionary things that we would want to do in the operating fund. That's what we're trying to build toward, making some room in the operating fund. We have our collection materials, which is 14% of our budget. Which actually needs to be more right now with the demand on our e-resources.
Mm-hmm.
So that's an area that needs attention. We have our utilities at 4%, and then we have repairs and maintenance, which takes up 6% of the budget right now. And this is even with us spending a lot of our capital improvements from bond funds, because we're doing things like roofs, parking lot repaving from bond funds. Those things would typically come out of the operating budget. So even with that, we're at 6% there. And then what's this for? Oh, this is just a combination of things. Other services and charges is this 4% here, which includes our cleaning. Our cleaning probably comes to about 1% of our budget. So then here is, and I apologize, this is a little small. This is our long-term plan. And we do engage a consultant that helps us keep track of what's happening out in the world, in the government finance world, in terms of helping us in projecting our revenues, in terms of projecting what our assessed values will do, projecting what our income taxes will do. And so he helps us put this together. this shows our beginning operating balance. And then it shows our revenues, our expenditures. It shows what our excess or our deficit of revenues over expenditures. So as you can see here, in 2016 through 2020, we've had excess of revenues over expenditures. Now, part of that is because we've been really tightly budgeting, or tightening our expenditures, not our budgeting, our expenditures in those years, trying to build up our cash balance, knowing that we will need it in future years when we open a brand new branch, Fort Bend, for instance, which needs to be fully staffed, and all that will come from operating budget. Let's see what else to discuss here. As you can see, we show our 2021 budget here. We're projecting that we will have a deficit of 3.8 million. The truth is we probably will not have a deficit of 3.8 million. We typically hold our expenditures and don't spend at least 5% of our budget. And so it says 3.8 million, but we won't have that much of a deficit, most likely. And then again, in the revenues, we've only budgeted our actual 100% of our levy, then our circuit breaker projection. And then here's where we projected what we think we won't collect, and we might take that part out. It's 454,000 here. So any questions on this?
No, this makes sense.
Okay. And then, so we're projecting out to future years, and we need to do some work on this, but I wanted to show you guys the idea that we have this long-term plan. And just so you can, if you start thinking about questions for future years, you can ask. But I need to work on the assumptions on here to refine it, and we'll bring you a refined plan, I think, in our April meeting. So be looking forward to that. And we'll show all the funds and we'll discuss in more detail then.
Sure.
So I think I took way longer than planned on this particular item. So, but I think it's important to understand how we end. Okay, so then I'm going to go to our next, which was our internal controls. Fun topic. All right, let me share my screen on that one too. You know what? I'm just gonna share the PDF that I sent you guys because that seems to be easier. All right, can you see that?
Mm-hmm.
Okay, so let me go to the next agenda item.
Oh, yeah, that's good.
Okay, so I just wanted to briefly talk about the fact that internal controls are a requirement for us. And so we're required to have these internal controls by statute in order for us to maintain accountability and transparency. And these controls are audited. Actually, they didn't used to audit our internal controls. Last year was the first year they started asking questions and wanting proof of controls in place. So it's something we're focusing a lot more on, and we are evaluating more. And you guys have a role to play, and you'll see that in here. I have this video. I hope it plays. It's very short. If you will bear with me, let's try to play it.
The one I got was 26 minutes long.
No, not that video. It's not that video. This is a very short one.
I watched the other one, and it's boring.
Yes, it is boring.
Hey.
And I'm sorry.
And I thought it was very exciting. I watched it twice.
Okay, hold on. I'm going to try to share my screen with the YouTube video. Where is it? Can you guys see this?
Mm-hmm.
All right, I will start this over. How do I do that? Let me try to start it over. I apologize.
I can't hear anything.
EJ, when you share your screen, there's a little box to check that says you share your computer audio. I think you have to reshare to get the volume to come through the Zoom.
Thank you.
Sorry about that. Does that make sense?
Yes, it does.
Okay. When you hit share, there's a little box in the bottom left, I think, that says share computer audio or something like that.
Aha, share sound.
There you go.
All right, perfect. Okay, now I have to figure out how to start the video again. Sorry.
That's all right. I want to see it.
We'll get better with the next one. I'll be ready. Here we go.
Life is full of risks.
Right.
All day, every day, we do things that can go wrong. But thankfully, there are protections in place to make things go right. In business, we call those protections internal controls. Some may call them bottlenecks. But to protect your business and achieve your goals, internal controls are critical. They help detect errors, avoid delays, and prevent negative financial and reputational impact. We use the internationally recognized COSO internal controls framework to guide us in designing and evaluating our internal controls to manage operations, ensure financial reporting is accurate, and to be compliant with applicable regulations and our internal policies and procedures. There are different types of internal controls: preventive and detective, manual and automated. To show how they work, let's use a new loan, for example. To prevent unauthorized loan transactions, we obtain board approval, which is a manual preventive control, and automated preventive controls such as system access restriction and system-triggered approvals when dispersing payments. To find errors or confirm information accuracy, we use manual detective controls such as reviewing analytical data and budget reports, and automated detective controls that reconcile information from system to system. We use a combination of many types of controls to provide the greatest risk detection, correction, and ultimately prevention. We're all responsible for internal controls, but we may play different roles. Senior management sets the control environment. VPs and directors oversee and allocate resources and monitor. Managers create strong controls in their processes and teams. And staff executes the controls and communicates issues to their managers. If you think of your responsibility as a leg on a table, it's easy to understand how our collective participation is critical to our success, and how together we can manage risks.
Okay. So that was just a short video because I wanted to kind of, oh, hold on a second. All right. So with that, I just wanted to kind of give an overview of why we have internal controls. And so what I'll do here is just explain what our framework is for internal controls, and then try to explain what your role is in it, in the framework. So let me share again. Okay. So this is just showing another graphic to show what's the point of internal controls is to combat fraud, prevent mistakes, so to ensure accurate financial reporting, and then also to ensure compliance with rules and regulations, so state statutes, and all of the other regulatory bodies that we have to actually comply with. And I'll show you those quickly.
EJ, is this the link for what you just showed us on YouTube? Under where it says overview of internal controls, there's a link here.
Yes, that link is what I just
Okay.
showed you. So
Good.
if you want to go back later and look at it.
Definitely will.
So the COSO framework, which is what they talked about in that video, is this. And it shows you kind of how you should organize or think about your internal controls. So the main objectives are to have these controls in place in your operations. So you can see this top part, in your operations, in your reporting, and in compliance with statutes and other rules and regulations. And then these 5 areas here: control environment, your risk assessment, your control activities, information and communication, and monitoring activities. Those are the components that you have to think about in structuring your internal control framework. And then obviously these are all the areas that are affected by the internal controls. So that is what they call the COSO framework. All right, so I'm going to only talk in detail about 2 areas. The control environment. Now, the State Board of Account asks us questions every year. We have to fill out this Form 7 that asks about all these components. And in the control environment, they ask about how does the board review our financials? How is the board in tune with our financial operations? And so we do answer that we have a finance committee. We do answer that we give a monthly financial report. We do give you guys a list of our checks every month in our board report. And so if there are missing numbers in the check numbers, that's part of our control. We explain what those missing numbers are. And so if you look through and you see a missing number, feel free to ask what it is if we don't explain, because it is part of your job to kind of have that overview reporting to you, and that you can ask us questions about our financials. And so one of the most important parts of the control environment is the tone at the top. So the fact that it's important to you guys, it's important to Jackie, that we have an environment of trust and integrity. Then that permeates through the organization, that this is something that's really important to us. So it talks about also climate of competency. Are we hiring people who have the right professional background for the job? And so we have job descriptions and we have minimum qualifications. All of that is part of putting controls in place to make sure that we are not making mistakes, complying with rules and regulations, and preventing fraud. And so I won't go through all of these, but as you can see here, it says participation of those charged with governance, the board. And so the control environment involves the board. And so that's why it's important for the board to understand it. And it's important for you guys to dig in and ask questions because we should be as transparent as possible. And you're a check for us in case we are making mistakes. And then control activities, I'm going to go over that too. Control activities are the actual activities that we put in place in order to prevent mistakes from happening or prevent fraud. So one of the big things we do is we segregate duties. So for instance, the person that cuts checks, she has no access in the system to enter invoices. So that way she cannot make up an invoice and then cut a check and no one else knows. So those kinds of segregation of duties, system controls, or control activities, having unique IDs, unique passwords, the fact that our time cards are approved by your manager to prevent people from claiming to have worked when they didn't work. The fact that our salaries are approved by the board every year. And then anytime there's a change to the rate, there has to be a personnel change form that has multiple levels of approval. So those kinds of things are some of the control activities we have in place. And so as you're looking at things and you're thinking about if there's, you can think about, well, what control do you have in place to prevent this from happening? You can always ask us, like, what controls do you have in place to prevent you from bringing inaccurate information to us? And I would say, well, part of that is we have controls on all our disbursements that go out, multiple levels of approval. We make sure that we review the treasurer's report. Once it's compiled, somebody else reviews it. That's a control that we have in place. Yes, go ahead.
How do you, with so many people who have been working from home, how do you approve time cards in that situation?
Right. So different managers have different ways to verify that their people are
okay.
Right. But the hourly employees do still have to punch in. They have to clock in and clock out. But for our salaried employees, it's really, the check is the work done. So for our staff, if somebody's not, for instance, in the finance department, we know what each person has to do and has to get done. So if they're not getting done, then that's a red flag for us.
So you kind of look at workload and and if they,
and what people are accomplishing, yeah. But that's a excellent question. What controls do we have in place to make sure people are actually working their hours? And so,
I'm sorry, I just interrupted.
No, you're fine.
Because I have received phone calls from patrons about what is the staff doing, how is that being documented as it relates to their hours since the branches aren't opening and all of that type of stuff. So at least I'm glad that you guys have something in place, that can be monitored not only for salaried employees, but the hourly staff as well.
Yes. And for branch staff, they still have to go into the branches. So they're physically there and their supervisors can see what they're doing, even when we're not open.
And you say you've had calls about that?
Yeah, I had one individual actually call my office here and went kind of ballistic. So it wasn't pleasant hearing that, but there again, I mean, they got to understand we're not open right now, but
Yeah.
I'm glad that EJ, had expressed those additional safety measures that are put in place, just in case, you get a information. So I'm glad that that's already put in there just in case.
I will say it places a lot of responsibility on a manager to know what their people are up to and to be in communication with them.
Yeah.
Even though their staff, for example, in the communications department, they're pretty much all working at home. But Joe is still having weekly staff meetings. He knows what their expectations are to get done that week. And it's on him. I mean, he's the accountable touch point about his team. And this applies to every manager to really be in communication with their people and monitoring that they really are still producing since they're getting paid.
Yeah.
Yeah.
Okay, thank you.
No, those are excellent questions, and it's just all part of. And as patrons ask questions, feel free to ask us, because we might already have something in place, but it may be something that raises, an opportunity for us to review a practice too. So,
Okay.
and then this is just a summary of everything, since I mentioned to you guys the control activities, the control environment, and then the risk assessment is really taking a look at your organization, seeing where you have risk, and making sure that you're putting enough mitigating controls in place to address those risks. And then the monitoring is then once you have these controls in place, how are you making sure they're getting done? And then information and communication is making sure that you have a way to stay abreast of like legislative updates, changes in requirements from State Board of Accounts, and making sure that you're communicating those changes to the appropriate people and communicating about internal controls to the appropriate people. So that's the basic gist of the control environment. And then I just wanted to briefly go through our finance department just to get you guys to understand a little bit more about us. I'm not going to read this, but we do have a mission statement, and we try to look at it every once in a while to remind ourselves of why we do what we do, keeping all of our stakeholders in mind, which includes you guys. Of course, our patrons, City County Council, which approves our budget, and then all of our employees. And then what are our primary functions? We do obviously the accounting operations, which includes the check disbursement, receipting of revenue, and the financial reporting, and then long-term planning and the budgeting. We're in charge of the purchasing function. We actually have a position open right now for procurement manager. It's open until the 15th. So if you know anyone with good qualifications, please send them our way. We also do the debt management and administration of our debt, which involves some work. And then we do our investment management, which is really pitiful right now because interest rates are horrible and we can't invest in much of anything as government. And then we do our treasury management, which is just managing our cash and cash flow for the year. And then when I was talking about what our regulatory bodies that we have to comply with are, here are all of the regulatory bodies that we have to pay attention to. And I'll just point out some, obviously, state statute, we have to pay attention to legislative updates. State Board of Accounts, which they actually do our audits every year. And then the Government Accounting Standards Boards, they are the organization that puts out accounting pronouncement for government agencies. So they determine how we actually present our financials. And then the DLGF, which does all of the regulation of the budgeting. And then the IRS, and then the MSRB really has to do with our debt. But we do have to file a report every year with certain, while we have debt outstanding, to show the investors. So usually we just file our annual report, but we have requirements there of things that we have to include in that annual report to make sure that we're keeping investors informed, because investors invest in our bond issues. So just to keep you aware of when it says the internal controls are there for us to make sure that we are complying with all these regulatory bodies. These are the ones that we pay attention to. Then I just wanted to give you kind of an overview of who we are, the finance staff. Obviously myself, Carolyn is our controller. She does our actually the majority of the work on our CAFR, which is our comprehensive annual financial report. She's in charge of our accounting operations, just the day-to-day function of approving invoices, getting checks paid. And so she manages quite a number of our staff. She manages our staff accountant, our accounting supervisor, who is actually the person in charge of AP. She cuts our checks. And then Mike Hollenbeck is our senior accountant. He manages all of our construction accounting. And then right now, this is purchasing. We have an open position for a procurement manager. And under the procurement manager, we have a person that fills orders for the branches. So the branches put in orders for cleaning supplies, various supplies, and these go out on a schedule with the shipping and receiving staff that takes stuff to the branches. So we have to, by 2 o'clock every day, we're filling supplies and sending out to the branches. And so Timmy is the person that does all of that. And actually right now, he's also doing the ordering to make sure that we have stuff in inventory in order to send out. So when we run low on toilet paper, he's reordering and doing those kinds of things. Then Jenny is our budget analyst, and she works with me a lot on our budgeting, our budget book, our financial analysis and strategy, our long-term plan. So she does a lot of the analysis type of work. And then we have our AP person, and then we have our accounting assistant who does all of our receivables. Any question? Pat, you're muted.
Sure am. How does that work? Like you said, Timmy, if the branch needs something, Timmy fills the order. And then the order is taken to that branch for what they need. Okay. So they
so they send in a requisition. He prints out the requisition and sees. So they do, every branch has a different week. So everybody's not on the same, everyone has a schedule.
Okay.
So they determine what they need, and they should plan ahead to see where to go, and then they complete the order form, and then they can order some stuff for themselves from like little office supplies. They have an account with Staples. And directly.
And it goes out on the delivery trucks, Pat, because our delivery trucks go to every location every day because we're moving books around the system for the patrons.
Yeah.
Okay. And then we're also, by the way, making deliveries to the schools that are in the shared system.
Okay.
So these items just simply flow right into that whole process.
Okay. Thank you.
Garage is a busy place.
Wow.
It is a busy place. Yes.
Telling.
Other questions on this? I just kind of wanted to give you a picture of what our department is.
Yeah. Appreciate that.
And then I wanted to also give some highlights of things of our 2020 year and brag a little bit about our getting the first GFOA Distinguished Budget Award. So we applied for it for our 2020 budget and we did get it. And so we were very happy about that, since 2020 was not a year full of
Yeah,
we want to celebrate that.
that's great.
And as the library, we've received for 29 years now the GFOA Certificate of Achievement for Excellence in Financial Reporting. And so we're still waiting on our 2019 CAFR. We're a little nervous because we implemented a new GASB pronouncement, but we're keeping our fingers crossed that we get it for the 30th year in a row.
Wow.
So we did get a clean audit opinion. And anyway, you can read the rest of these for yourself. Those were the main ones I wanted.
Very good.
And then I wanted to say, we're committed to transparency. And we have a couple of our reports on the website. So if you ever want to go out on the website and look at any of our reports, you guys get them anyway, but this is really more for our patrons and the community. At the bottom of the website, there's a place that says plans, policies, and reports. And out there we have our budget reports. We have the monthly reports for you guys in the board documents. We have our comprehensive annual financial report, I think for the last 3 years. And then we also have a link to the Indiana Gateway. And Indiana Gateway we have to report a lot. We have to report all of our debt. We have to report all of our salaries. So it has compensation for all staff on there. It has all of budget information. It has our assessed values. So it's got quite a bit of information there as well. So it has that link on our website. So just want to let you know what we were doing for transparency. Let's see what else I got here. Okay, so that's it for internal controls. Any questions that you thought of? All right, and this is the final thing, and I'll go through this really quick because it's just really to tell you guys that we do an annual investment report. Let me go down a little. Am I still sharing?
Uh-huh.
Okay, didn't look like it on my screen. So last month, you guys designated the Marion County Board of Finance as our Board of Finance, which we've done every year now. And so one of their duties is to review our investments. And the other duty they have is to review our investment policy. So we prepared a report for them that included our investments for the year, and also includes our investment policy. And so attached is that report that we prepared for them. I'll just show you one page, maybe something that shows how badly things went at the beginning of the year. So this shows all of the institutions that we have investments with right now. JP Morgan Chase, Fifth Third, Hoosier Fund, which is an investment pool, Trust Indiana, which is the same, and then US Bank. As you can see, this is how we started the year in terms of interest yield. So let's look at Hoosier Fund, 1.8% at the beginning of the year. By the end of the year, we were 0.41%, and now it's 0.3%. So it was not a good year in terms of interest earnings. And we really tried to focus on this at the beginning of the year, and we're doing so well. And we were so disappointed with, of course, along with the rest of the world, how things went. This shows our average invested balance by institution. So Chase, which is our primary depository, that's where we have our checking and our savings account. They have the majority of our funds. And now with interest rates being so low, we're actually keeping more in Chase because we do get a credit on fees. And so now we have to weigh, oh, is the credit on fees
More than what we'd make.
more than what we would have paid, exactly, which is just very sad. But anyway, just to let you know why we have more in Chase now. So any questions on the investment report? You have it, you can look through it, but I figured I wouldn't take up much more of your time by going through it in detail.
No, that's great. Thank you very much. This has been super informative.
Very
Okay.
helpful.
Good. Well, if you think of any questions that you have later, please call me or email me. I'm happy to answer any questions. If you're looking at our treasurer's report and have a question, I'm happy to answer. I don't get offended. I'm happy to answer.
Oh, no. Yes, you're always very, very welcoming, and I shall continue to call you. Thank you
Thank
so
you.
much, Jackie and EJ.
Yeah, thank you.
Yeah, thank you, guys.
Appreciate it.
All right, yes.
I'm really confident. EJ's got a real handle on all of this. It's wonderful.
Yeah, can tell. All right, are we finished?
Yes.
Thank you again. Thank you, committee. Thank you, Jackie, and on to the next meeting now.
All right. Thanks, everyone. Have a
All right.
good day.
Take care.